Thanks for joining us tonight. We're really excited that the funds opened last week, and tonight we're going to talk about some of the exciting developments that we have in the funds, some properties that we already have under contract, and why we think they're a great opportunity for the Spartan Storage funds. And with that, we're going to go ahead and get right into it. I'm going to start with our disclaimers, which we're not offering any legal, tax, or investment advice. This is just a general overview, so please do all of your due diligence and consult with your legal, tax, and professional team. Any projections in here are just that, projections, and past performance is not a predictive of future performance as well. So with that, we'll go ahead and get right into it. We just wanted to talk about how the funds are now open for investment, and that's the Spartan Storage Income, Growth, and Debt Fund. These are the three funds that we offer this year, each one having uniquely different characteristics. So the Spartan Storage Income Fund, much like our Spartan Storage Fund 1 last year, has cash flow, upside, and depreciation benefits that benefit our investors for those who are seeking to replace active income with more passive income. For the Growth Fund, this is our ground-up development fund, or the investments that have the most upside potential. This could be everything from taking raw land and entitling it and building a brand new facility to buying a facility that was just constructed and built, so it has strong upside. And we really look for kind of accretive and creative opportunities in the Growth Fund. And tonight we're going to talk about the first example of that. We're really excited to talk about our first ground-up deal that will be closing in the summertime. And then lastly, the Spartan Storage Debt Fund. This is exactly that, a debt fund where you can invest in notes that has cash flow, it's backed by self-storage, and it's just a lower risk investment overall, a little bit more consistent return. But I wanted to really stress the importance. We've had a lot of interest in the Spartan Storage Fund or Spartan Storage funds, and we've seen over $50 million in commitments in the early opening of the funds, which is great. And we just wanted to let everybody know that if you invest prior to May 1st, so in the first 45 days of the fund opening from March 15th, you get moved up a full share class. So what does that really mean to you as the investor? So if you're a growth fund investor, that means that if you are an A investor investing $50K and you get moved up to be the benefit of a $1 million share, you get an 8% overall better projected return. If you're in the $1 million or more class and you get moved up to C class, that means that you're going to benefit 15% overall. So bottom line is, if you invest earlier, you're going to get more projected return for your investment. On the income fund, similar benefit overall. Class A that moves up to Class B, about a 5.5% return. Class B gets moved up to Class C, about a 9% overall better return. So if you haven't invested yet, if you're thinking about it, we wanted to provide you with a maximum benefit for getting into the funds early because we have some deals already in the pipeline that we know we're going to get closed. So we're really excited to offer this investment opportunity to our investors. So tonight, I'm going to have our VP of Development, Gerrit Van Maanen, who's going to come in and talk to us today about our Growth Fund first investment. So as you know, the Growth Fund is ground-up development, facilities with the most value, and accretive and creative opportunities. And tonight, Gerrit's really going to kind of dive into the creative and creative part. We actually have a piece of land. We've been working on this parcel for since last year, so since October, going through entitlement and annexing the property and getting it zoned correctly for self-storage. And we're picking it up at a low basis. And as soon as we get those entitlements done, before we even close on the property is going to really jump in value by almost double. So we're really excited about that. So without further ado, Gerrit Van Maanen, he's our Vice President of Development. We're going to go ahead and bring him on. Gerrit, why don't you talk to us about the market that this is in and just kind of an overview of this new project.
Thanks, Ryan, and I really appreciate the opportunity to come on here and have a conversation with you about the exciting development deals that we're working on for the Growth Fund. And this is a passion of mine, ground-up development. And I'm super excited that Spartan is leaning into ground-up development and to be a part of it with the rest of my team. So this first deal that we have coming into the Growth Fund is in Bellevue, Florida, and it'll be free up storage Bellevue. And what we really like about this market is that Bellevue is kind of a sleeper city. It's a smaller town, a lot of retirees as we see all across Florida, but it's sandwiched in between two super high growth towns. One being Ocala, where we already have a free up storage facility that's performing very well. The other one being the Villages, which is one of the fastest growing towns in the entire nation. They're producing over 5,000 homes a year there. And we're seeing a similar growth push up from the Villages into Ocala, and Bellevue's being sandwiched by both of those markets, which is just fantastic news for us. This project is a 85,000 square foot single story facility. And what we are looking to do here is kind of a class A single story, which is something that you don't see a lot given how large of a site you typically need to produce one of these. And that's what makes us really excited about this project is the fantastic growth, the rents that we're seeing in this market, and the ability to build a facility of this caliber in a market like this.
That's great, Gerrit. So why don't you talk to us about all the work that's been done and maybe how you found this deal, and then talk about kind of the value proposition of all the little nuances and entitlement that you had to work through and how you're better positioning this property to create value.
Well, Ryan, this was an off-market, non-listed site. And we found this site back in October. That was when we first reached out to the seller of this. And we are working directly with the seller on this transaction. We've been doing all sorts of things with them since October of last year. So there's been tons of value creation in the 6 months since last October. A big piece of that is we've annexed this site into the city and have taken it from, it is currently in Marion County. We're taking it into the actual city of Bellevue so that we can tap into city utilities. We've gone through a rezone process as well, taking it from county zoning to city zoning, which allows for self-storage, which is adding tons of value to this property. We believe we've been accretive already from our price on this dirt to what we could sell it for at permit ready.
Thanks for sharing that, Gerrit. Really great points there. And also, I wanted to talk about the basis in the property, what we've spent, and how much value has been created in the property before we even plan on closing.
That's a great question, Ryan. So we have this site under contract at $1.4 million. We're putting an extra $150,000 in direct hard costs for entitlements. This is the cost of hiring civil engineers and consultants to take us through that annexation and rezoning so that we have an actual permit-ready, shovel-ready site. And the market is telling us that a site like this is worth about $3.1 million at permit ready, which is really exciting news when we have a cost basis of roughly 1.6.
That's incredible, Gerrit. So let's talk about what does that actually mean to the investor and the aspect of returns. If we were to sell this property, and what would that mean to a Class B investor on what they would get in returns?
If we sold this as an entitled site, our return to the investors would be over a 28% annualized cash-on-cash return.
Now, Gerrit, I mentioned that this was for the Class B member. Can you verify that all returns that an investor may see in the underwriting file are based on Class B returns?
Well, Ryan, we've underwritten this extremely conservatively, and we've also underwritten it as everybody being a Class B member. So if you're a Class C member, you could expect even higher returns. But what we've seen on this one is we're projecting a 28% annualized cash-on-cash return, a 2.7x equity multiple over a 5-year hold if we were to take this thing clear through to stabilization and sell it as a stabilized asset.
So Gerrit, I wanted to talk about the 3 different exit strategies that we have on this investment. One thing that we really like about the growth fund is that we can buy and entitle and sell, we can get it to certificate of occupancy and sell, or we can get it to stabilization and sell. And it's all about mitigating risk in the beginning on the entitlements and construction portion. Can you kind of speak to that?
One of the things we love about development is that we have 3 different exit strategies on a project like this. So we could sell this as an entitled site, a shovel-ready site. And we talked briefly that we think a site like that would be worth upwards of $3 million. And that's one exit strategy that we have, which we really like because of the value that's created during the entitlement phase, going through the rezones, going through the annexations, doing that utility work and having those cursory conversations with the city and with our land use consultants. The second option is to build the facility get our building permits, take it through the construction phase, and sell this project at certificate of occupancy. We think a facility like this is easily worth $12 million or more at certificate of occupancy, with a cost basis that's a lot closer to $9 million or so. The third option is take that facility, go through the construction process, then begin the lease up phase and get that facility stabilized. In a great market like Bellevue, an option like this would have a facility that's worth over $18 million at stabilization.
That's great. And before we get into actually what we would build and deliver, can you kind of talk about how we've structured the purchase and sales agreement with the seller to mitigate all the entitlement risk before we actually have to close on the property?
That's one of the fantastic things about development. And one of the ways that Spartan does development specifically is we look to mitigate as much risk as possible before we close on the dirt. One thing that we do right from the outset is we build fantastic relationships with sellers and brokers. Before we even get to the contract, we know we have to have a relationship with this person, because this isn't going to be a 90-day transaction. This is probably going to take a longer time, because we want them to hold the dirt through that risky entitlement phase while we're figuring out exactly what the city's going to let us and make us do to build this facility. Once we go to contract, one of the differences between an existing acquisition and a development acquisition is we have a government approval period. That government approval period could be anywhere from 180 days to a year. Sometimes we've even written them to be indefinite in nature. And they allow us to have the facility under control while we go through all of the entitlements. We go through CUPs, SUPs, rezonings, and have those complicated conversations with the jurisdictions so that we can get a site plan approval. And that government approval period, Ryan, will even let us go all the way to getting permits in hand. And so we're not obligated to close on this facility until that government approval period ends. And we're the ones that have the ability and control to close that government approval period. So when we initiate a contract, we begin that government approval period, start engaging with the seller, engaging with the city, and doing whatever needs done to entitle this site for a ground up self-storage development, at which point we can end that government approval period and finalize the closing of on the dirt.
So basically what you're saying, Gerrit, is we don't have to close on this property until we have a full set of drawings completed, bulldozers on site, ready to start pushing dirt.
You're exactly right. We have no obligation to purchase this until we are ready, and we have totally de-risked the project. We began working with the seller in October. We put this site under contract in January, but we likely won't close on it until June, when we've got a full set of building permits, drawings in hand, and bulldozers on the way.
So Gerrit, why don't we talk about what we're actually building here and what we did to go about deciding what unit mix and number of units, et cetera, at the property?
Glad you asked, Ryan. This is a 4.5 acre site, so we have a lot of optionality on what we could build here. What we have decided to do is 45,000 square feet of single story climate controlled in one self-contained building. And we're doing an additional 40,000 square feet of non-climate drive up self-storage. So we'll have a total facility of about 85,000 gross square feet, delivering us a little over 76,000 square feet net. And that's one of the great things about these larger sites is we have the option to go higher if we want to, but if we can keep it single story and keep things a little bit simpler, that's a fantastic solution, especially for a project like this. The way that we decide on that unit mix is we go through full feasibility. We look at what's in the market right now and is performing. What might be missing in this market that customers would really want? And our feasibility team looks at all of these different quantitative and qualitative factors in addition to the constraints of the site, making sure we have enough room to build that big of a building and leave room for detention and landscaping and all those other things. And that's how we decide what we're building out here. We think a unit mix like this is going to perform extremely well in a city like Bellevue.
Thanks for that overview, Gerrit. We really appreciate you coming on and all the good work that your team is doing. We're also going to talk about a little bit about what the ground up development builds. And you can see here, everything's built to our free up storage national brand standard. These are a few examples of facilities that we built or acquired and renovated. And just like Gerrit was mentioning, we're looking at markets like Bellevue where there's strong population, income, and job growth, and where we have economies of scale with our other properties. But I'd like to just quickly go over the income fund. Now we have a ton of properties in our pipeline in the income fund. We don't have time to go into all of the properties tonight and go through those individually. We'll do that on a later webinar. But the income fund really targets the three things that investors are looking for in any real estate transaction: cash flow, upside, and depreciation. And income investors can expect a 14 to 20% annualized return, basically double your money in 5-year hold period. And the cash flow is really what we like about the income fund, where you're targeting between 4 and 8% per annum cash flow through the hold period. And cash flow is projected to start within the first 90 days of the investment. We send out all of our distributions on a monthly basis. And if you can see here, this is basically a 5-year projected timeline. And at Spartan, what we do is we like to buy the asset, roll out our tenant insurance, ancillary revenue, get the existing customer rent increases in place, and do better marketing on the property to really implement our business plan. And you can see here, cash flow in the first year is 4 to 5% as we get those things implemented. And then through the hold period, the cash flow increases to 7 to 8% per annum. So an example, investor puts in $100,000. You could expect 4 to 5K, 4 to 6K, 6 to 8K, and then 7 to 8K in the last 2 years of the investment, in years 4 and 5. So that's about $28,000 to $35,000 of cash flow. And then the other $70,000 or $65,000 would come from the sale of the facilities that the investors share in. So overall, expecting $333 or $666 per month on a projected basis. Similar to the growth fund, the income fund gives an investment benefit if you invest in the first 45 days. And this ends on May 1st. So we've had a lot of interest in this early investment offer, and this benefits investors who come in early. And basically it moves you up a full share. So if you're Class A investing $50K, you get the benefit of investing as $1 million investor. And what that means is you're going to get a 5.5% total return better than what a Class A member would get. And likewise, if you're B, you get a 9% benefit over a Class, or you get a 9% benefit over what a Class B member would get, because you get bumped up to a Class C investor. So income fund's really great for cash flow. It's only buying existing value-add properties and core plus assets that have net positive cash flow from day one. And it's for those investors looking to replace income or turn hard-earned active income into cash flow. So last but not least, the lowest on the risk perspective, it's the debt fund. We do cash flow monthly distributions, and the debt fund really is backed by our self-storage projects. And the target returns on the debt fund are 8% if you want a 90-day lockup period, meaning that we'd have to have the money locked up for a minimum of 90 days before you can call it, or a Class B note investor, which is going to get a better interest rate at 9% and have a 2-year lockup period. And both of the details on the redemption period can be found in the PPM. Highly encourage you to review all the offering documents before making a decision. But what I love about note investing is that it's one of the best things that you can do in real estate, really, because you get predictable monthly payments every single month on the first, and it's a shorter timeline for payments. So if you don't want to be into a long 5 or 6 year hold on an equity play, it's a shorter timeline for a payment in private debt. And also, there's no UBTI or UDFI when you invest in private notes. So it's great for self-directed retirement accounts. All of our deals come with monthly reporting. Monthly updates that come from us. I personally am involved in the monthly updates every single month, where we send you monthly financials, monthly distributions, if there are any, for the debt or income fund. For the income or growth fund, and consistent distributions for the debt fund. And then all K1s in March, and then if you do the debt fund, you get the 1099 INTs in the January timeframe. This is what our investment update typically looks like. Goes to your inbox, also gets uploaded to your dashboard via an investor statement. So a little bit about Spartan leadership team to take us home. My name is Ryan Gibson. I'm the Chief Investment Officer, co-founder, along with Scott Lewis, who's our CEO, and then also Ben Lapidus. We lead the Spartan Investment Group, which oversees construction, our free up storage, national brand, our people, and our finances. As you can see here, we have Aaron Saunders, Matthias, Whitney, and Chad, who are leaders within the organization. And specifically, the Growth Fund is going to have all of its construction projects built by Spartan Construction Management. We have over 100 years of construction experience, deep experience in the self-storage industry, and that is led by our president of the Spartan Construction Management Company, Aaron Saunders, who has a very good background in industrial and self-storage construction. On the free up storage side, so if we were to take any of our assets into property management, free up storage is our national brand, and that's led by our newly named president, Matthias Kelmer, who comes from Extra Space, where he was the VP of asset management there, overseeing a big team and overseeing their assets. And we're really fortunate to have him join the free up team and really take that brand to the next level. And currently, we're about the 40th largest operator of self-storage in the United States. And everything we do is vertically integrated. So everything from finding the property to financing and finding the debt and the equity to property management and construction, Spartan does the whole value chain within the self-storage cycle. But if you'd like to subscribe or like more information, you can go to our website, spartan-investors.com. You can see it here on the screen. You can go to our little dashboard link at the top right. That's our investor dashboard. And if you've never logged in before, this is where you put your username and password, but you can create an account here on the bottom right and log in and get access to the offering documents, the deal room, all the feasibility and underwriting reports that I talked about, the PPM, the operating agreement, etc. And then if you decide to move forward to invest, that's all in there as well. You can see here, once you log in, you'll see all 3 funds. And if you click on open offerings, that's where you can find the deal that you want. You click on it, this takes you into the deal room. You can see all the offering documents here on the right. And then if you wanted to move forward to invest, you would hit the Invest Now button. That would take you through a quick 4-step process to get invested. So that's all the time we have for today. We wanted to thank you for coming and listening to what we had to say about kind of the stuff that we have in the pipeline for the Growth Fund and the Income and Debt Fund. If you have any questions whatsoever, you can email us at investors@spartan-investors.com. We appreciate you joining us, and we look forward to having you invest in 2023 with Spartan. Thank you.